I want to pivot a little bit and cover some things that, when we kind of announced to our clients, and there's a lot of non-clients out there as well, that we were going to talk with you. They wanted to get your take on a lot of things. One of them was, and obviously I'm not going to hold you to the answer because nobody knows the perfect answer, but give us your overall outlook. And at the time of this taping, so everyone listening and viewing, look at the date. So if you're listening 3 years from now, it's dated. Just markets in general, interest rates, just your overall. You've done this a long time. What's
Yeah.
your overall feel about where we're at right now at the
Yeah.
time of this taping?
I started in 95 as a financial planner, or what we were called a registered rep at the
Yeah,
time. And so I went through the dot-com, bull run.
sure.
And I will tell you, in the late 90s, I remember people who wanted to put 100% of their money in science and technology mutual funds. And I remember asking one person to sign a disclosure form because I wasn't comfortable with that.
Right.
And eventually it all crashed. And, here you were at the time trying to give advice on diversification and not chasing these trends. And it was very difficult to get people to do something that would be in their long-term best interest. And then we went through, that was essentially almost a 3-year
Yeah.
downturn of 99, 2000, 2001. And then, of course, we had the run up to 2005, where we had this crazy bull real estate market, and then the ensuing crash. I had clients that retired in December of 2007. They
Mm-hmm.
are fine. It was super scary, but we
Sure.
had stress tested the plans, and nobody had to go back to work. And it works. Planning works. And so then I've been through the ensuing decade since then, where it seems that every year, people are waiting for that next crash.
Sure.
And we, of course, got that during the pandemic from as usual, some unforeseen outside event. And now here we are at what people have often referred to as an incredibly overvalued stock market. And the truth is, nobody knows. I mean,
Yeah, exactly.
there are so many headwinds, good, I suppose I should call them almost tailwinds, that we could
Mm-hmm.
look at. Of course, there's headwinds too, but there's a lot of incredible things happening with technology that can
Yeah.
improve productivity right now. And can the stock market continue on the sustained double-digit returns? No, it never can. So my answer when people ask me about the market, I had a client ask me a few weeks ago, so, when's,
Hmm.
is there going to be a bear market? And I said, yes. I always answer yes. I just,
Absolutely. I just don't know when.
just don't know when. And so what you got to do is prepare your portfolio for
Right.
that. You have to have some type of rules-based system to take gains off the table. We are doing that aggressively right now.
Okay.
So these gains, incredible gains we've seen in the last year, you take some of those gains and you park them into a safer, low volatility. It's not going to earn much. The price of safety is a low return, so you have to accept that. But you're parking some of that in a safe place so that you can use it to draw out of when you need to. In terms of interest rates, again, since the Great Recession, we have been saying that there will be higher interest rates in the future, and we had just started to see 2% yields on money market funds
Right.
in January of 2020.
Right.
Before this hit, I remember so excited, like, I can earn 2% on a money market fund again. Oh my gosh. It's been since 2006 since we had seen that.
Right.
And now here we are, back to zero. It won't stay that way. And so
Right.
my answer to all these market questions is don't get caught up in these minutia.
Mm-hmm.
The media focuses on the minutia as if it was a sports game, and they're
Right.
calling out the play-by-play. After 25 years of doing this, none of that is really going to impact your retirement security. You are going to harm yourself more by trying to guess what's going to happen next and guessing wrong than what you can accomplish by simply following a disciplined plan that's designed for a 20 or 30-year time frame.
As I always tell people, these are old cliches. The bell doesn't ring at the top or the bottom, right? Hey, Stan the Annuity Man here. Did you like that little taste of my podcast, Fun with Annuities? Hey, if you want to see the full version, click the link and watch the whole darn thing. Remember, Fun with Annuities. Living the reality, not the dream.